Not long ago, Albuquerque looked like the oasis in the desert region, a region that's been full of hard-hit markets, but it looks like this part of the desert is cooling off. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Albuquerque update. Most of the apartment markets in the desert region were hit very, very hard in the downturn, and they have been slow to recover. Albuquerque, though, has been a very different story. It wasn't hit too badly in the downturn, and then in 2010, 2011, Albuquerque, the Duke City, was one of the most pleasant surprises in the country. Came on very strong and posted some good revenue growth. But to sustain good revenue growth, you need good economic growth, and that hasn't been the case in Albuquerque, so fundamentals have cooled off. Let's start with the occupancy story. You can see that in 2010, 2011, occupancy was in great shape, peaking at 96.1%. But over the last 7 quarters, occupancy has dropped off by 270 basis points. That puts occupancy at 93.4% as of Q2 2013. Now, it's not bad, but this is one of the few markets nationally that has seen that type and that level of backtracking. And rents, we see a very similar story. Same-store rents for new leases were jumping at as much as 4 to 5% in parts of 2010 and 2011, and that put Albuquerque among the nation's top performers during that time period. But the market just has not been able to sustain those kinds of rent hikes, significant cooling over the past year and a half, and as of Q2 2013, rents were up just 1.3% year over year. So what happened? And the job story really helps shed some light on the apartment story, which is often the case. Now, relative to some other parts of the region, Albuquerque's economy was not hit too sharply during the downturn. It did see a lot of bleeding, but certainly not to the degree that other markets in Arizona and Nevada did, certainly in large part because the housing crisis and the bubble wasn't nearly as significant in New Mexico as it was in those other spots. And when the apartment market turned back up in 2010, 2011, it really wasn't driven by jobs. At the time, we thought maybe the jobs numbers were underreported simply because demand was strong, and even though the jobs numbers were still negative at the time. But what happened, it turns out to be something we really saw across the country. And that is that in 2010, part of the demand story was that there was the unleashing of a lot of pent-up demand for apartments from folks who probably maintained their jobs during the recession but didn't have that confidence in the economy to go out and sign a 12-month lease or something longer than that. So we did see that in Albuquerque. Folks had maintained their jobs. They finally felt comfortable enough to go out and rent that apartment unit, and that drove up occupancy during that time period. But what happened in other parts of the country is that we started to see job growth come in after that, and that allowed demand to remain strong and keep occupancy in good shape. Albuquerque, though, didn't have the job growth coming in after the unleashing of the pent-up demand. Year-over-year job growth stayed flat and even dipped negative during much of the past few years, cutting off the demand pipeline, and that was what affected the apartment market. So this slowdown has really affected pretty much all aspects of the Albuquerque apartment market, all different product segments and submarkets. But the one submarket that has held up decently well is downtown Albuquerque. Now, there aren't very many apartments in downtown Albuquerque, but those that are there have done better than the suburbs. Occupancy in downtown is at 95.8%, still very strong and down only 10 basis points year over year. And rent growth here isn't what it once was, but still very, very solid at 3.7% year over year. Now, the good news for Albuquerque is that we are starting to see a little bit of job growth in the past couple of quarters, and we do expect moderate job growth to continue. So that should allow the local apartment market to stabilize. We're looking for occupancy to stay around 94% or so, and for rents to climb around 2.5% on an annual basis. And that wraps us up for the Duke City. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.